winning 90% of your new business because you have some sort of incredible value.
I'm going to take a bit of a different angle.
I've got a budget this big. I'm going to give it to you because you have a really killer plan.
You give a Red Bull to a turtle, what do you expect?
I think that's a dead turtle.
So let's move on to...
E-Rig.
Cheers.
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 Does your current premium finance company lock you into long-term agreements? That's because they don't want you talking to us. At IFS, we win your business the good old-fashioned way, with customer service. I know you don't always have to use a premium finance company, but when you do, you should use IFS. Cheers.
Hi there, and welcome to another episode of the Digital Insurance Pint podcast. As always, I'm your host, Tom Reed, and I'm joined by my colleagues, Steve Earle, CEO of Cheap Insurance.
Good day.
Jeff Roy, CEO of Excalibur Insurance.
Welcome, Pint people.
Adam Mitchell, CEO of Mitch Insurance.
Hello.
And today we're very pleased to be joined by Greg Purdy, CEO of Rival. Greg, how's it going?
Well, thank you for having me today.
Awesome. We're super glad to have you. And also just wanted to give a big shout out to IFS Premium Finance, our premier sponsor. Thanks to Jay and the team for all the support they give us. And so, as usual, Greg, we're going to get into a little bit of your what makes you tick. So I'm going to turn the talking stick over to Jeff, and he will ask you a bunch of incredibly insightful questions.
Yeah, great. Thanks, Tom. Well, we want to make sure our listeners get to know the people at the top of companies making all the decisions. So let's start off with a real tough one. We start out with everybody. Who is your favorite Canadian band or artist?
My favorite Canadian band? Well, I would have to go with Rush.
Rush? Great.
Hell yes. Yeah.
Okay, when you're not running Rival, Greg, what do you do in your spare time?
Well, I have a number of guitars. So sometimes if you ever catch me doing a call from my home office, you'll see there's 4 or 5 guitars lined up behind me. Got about 30 of them at this point in time. So I'm a guitar player.
Wow.
Not very good at playing, but...
Well, then we have to know, who's your favorite guitarist?
Well, I have to go with Eric Clapton.
Okay, good.
Wow, cool.
Now, you an iPhone or Android user?
I'm an iPhone.
Now, what is the last app you've downloaded, or what's the one application that you can't live without?
That's a good question. Well, I downloaded an app called Merlin for identifying birds.
Awesome. What books are you reading right now, or is there any audio books you listen to or podcasts?
I'm old-fashioned, so I read hard copy. I'm a book nut, so I've always got 4 or 5 books on the go at the moment. I've just finished reading a bunch of biographies. It's going to be very boring on Admiral Nimitz from World War II.
Oh, wow. That'd be a fascinating one. And then last question, dream vacation. You get to finally take a couple weeks off after all the work you're doing. Where would you go?
I'd go back to Hamilton Island, which is in Australia on the Great Barrier Reef.
Nice.
All right. That's gives our listeners a little insight. I'll pass it back to you, Tom.
All right. Thank you very much. So we'll get into it here, and I'm going to get Steve to start us off here. Steve,
Greg, tell us about your pedigree in the business. So how did you get into insurance or software or whatnot, and how you wound up where you are today and talking to us?
Well, my family started in the insurance business in the 1920s. So my grandfather started a brokerage. My father took it over. I'm the right age, and my younger brother, Jeff, is also about the right age of when PCs started entering the world. And we started messing around, writing some software for my dad's brokerage. I took a job at Royal Insurance, which was distributing the agency manager at the time. After about a year and a half, they reverted back to Applied. I started running Applied when I was 27 years old. Did that for about 18 years. Left, started another couple of companies, sold them. Sold the last one to Opta Information Intelligence a couple of years ago, and joined Rival. So I've been around a long time. Built all kinds of technology for brokers. Built 3 or 4 different broker management software platforms over the years. So
I guess the question on our side is what or why did you decide to join Rival?
it's an interesting question. I felt that not enough was changing in the marketplace. So I'd been working with direct writers for the last number of years, helping them with the kinds of things that they're dealing with in their insurance operations. And it became very clear to me that they are significantly farther ahead in some areas, and then they are farther behind, and they don't really understand the economics of insurance. So they're doing some things really well, and they're doing some things poorly. I'd been having conversations with a number of organizations over the years. I've been approached to take positions like this, and I've declined them. But I thought that the timing right now is kind of special. And it reminds me of when I started, when PCs were coming in and the impact that they could have on the industry. I feel that the dynamics are very similar right now. When I started, there were some very entrenched vendors that were significantly larger than we were. We were kind of seen as being the solution for smaller brokers, the not real players. Everybody else was using mainframe, mini, and some other crazy hardware platforms as their solutions. And we took an IBM AT and hooked up some dumb terminals and started selling that. And very soon we were having an impact, and we grew obviously very quickly over the years. I think we're at that same kind of inflection point where the technology is about to shift again. The players that are now dominating are very entrenched, and I'm not sure that they're flexible and responsive. So I think that I came back specifically because I thought that there was a real opportunity to rattle the trees and shake things up and do things differently again. And I enjoyed doing it the first time and thought it'd be fun to do it. I went from being the youngest guy in the room to now I'm the oldest guy in the room. So it's an interesting opportunity.
I feel that last comment about going from the youngest to the oldest. But so, Greg, when you joined Rival, it wasn't called Rival; it was called Custom Software Solutions, right? And I think most people in the industry would be well aware of CSSI. Been around for quite some time, operating out of, was it Virden, Manitoba, if memory serves, the Andrews brothers. So, I did some work with CSSI, back in the late 90s, early 2000s. I've had some experience with them. And so I'm interested, though, you rebranded it as Rival. And I find that a very intriguing and sort of provocative name. So can you give us some of the background behind the decision-making process and why the name Rival?
Sure. So first, it's much larger than simply rebranding the company. So we were not interested in a new logo or new colors or anything like that. We were literally looking at the foundations of CSSI, and CSSI was founded on some very, sort of core principles that the industry could change. There was a different way of doing things. You could be smarter about how you used your resources, and that's sort of historically what CSSI had done. And I think in the past 10, 15 years, the entire industry has kind of slowed down and kind of been at a very casual pace for innovation. So coming to Rival, we looked at a number of names. We had probably 100 different names that we looked at. And what we were doing was relaunching the company. So literally, we looked at how we took information from customers and turned that into products, how we related to clients, how we processed things, how we would build things going forward, and then how would we interact with the other competitors in the marketplace. There's no secret that there's a very large dominant player in the industry today, and there's sort of a narrative that the game's over, that the story of automation has kind of been written, the choices are done, and we should all kind of pack up and go home. And the name Rival is to suggest that there is an alternative perspective moving forward. There's an alternative for us as a company, but there's also an alternative for our clients, our brokers and our MGAs, that they can compete with anything that's out there, that there is an opportunity to have a system that rivals anything that's available. And it just takes a little bit of work, a little bit of effort, and somebody to apply some creativity and imagination as to where this industry could go. And that's really what we ended up settling on. We're not just rebranding, we are relaunching. And we're relaunching for more than just ourselves. We're relaunching for, we're kind of on a mission. We're on a mission to actually change the way broker automation, MGA automation is done going forward. I think the opportunity is really, really large and really special. So the name Rival is to reflect our own sort of ambitions to present an alternative perspective moving forward, some different options, and to also let our clients know that when they join us in our kind of mission, that they will have a solution that is not, there's nothing else in the marketplace that will surpass them.
And with that, I want to jump into our next question here is, what is your key focus at Rival?
So we again, people are probably going to think we're, dreamers, but, and maybe that's what we are. What we're looking at is we have technology, we have a distribution system. So we have, with us, we've got about 300 customers, and we can offer them technical solutions on how they can do their processes better. We could focus on that and be, very happy spending the rest of their lives just doing that. But we think that there's a bigger opportunity that if you think about streaming services, Disney's and Amazon, they have a distribution system, but they have content on top of that, and consumers are picking their streaming services more along the lines of what the content is. And in our vertical, the content is insurance. It's insurance products. And so one of the first things that we're doing is we're connecting our retail clients to our MGA clients so that they can exchange data. So there's some savings that are an immediate win where a retail broker can complete a submission, send it over to an MGA. It's data, it's not a PDF, and they can deal with that, send it back as data, and we're automatically saving time. But we're starting to build an insurance network effect on top of our distribution. So we think by opening our architecture up, we will partner with other organizations. So we think that the current sort of philosophy of trying to control everything is limiting the creativity in the industry. So we're creating what we call our Rival platform and marketplace, which is the first sort of new version of the stuff we're distributing Q2 of next year. It's the platform that connects the data exchange. It also allows our clients to go in and find third-party products that they want to download and work with. We're making that process very seamless. It's kind of like going to an app store, pick your apps, one place to pay for it, start using it, and you're up and running. By connecting our MGAs, if you're a retail client and suddenly you've got somebody who wants a hole-in-one insurance, we can show you the matchmaking using AI, which is the best MGA solution in our world, our ecosystem, that you can select that product from and go off and sell that. So it's really, we're focusing on changing the entire way people look at broker automation. Right now, it's kind of, hey, if you look at comparisons between what the various vendors do, people try to sell it on, we've got a better user interface, or we have better clicks, you can do some processes faster. We're saying, hey, that game it's time for rethinking the whole thing. And by coming back and approaching it from our clients sell insurance first and foremost, if we can find ways to make that process better using technology as the story, I think we're going to create a competitive advantage for our customers, but a competitive advantage for us. I don't think our competitors are going to be able to replicate the kind of things that we're contemplating. Having said all that, we have gone back and looked at what the user interface should look like for automation in 2023. Most of the applications, including our own current version, they're Windows applications. They're very old. If you're out buying brokerages or growing, expanding, bringing on new staff, it's going to be harder and harder to train and educate because it's kind of like teaching people green screens in the mid 2000s. It's stuff that's very out of date. So we looked at, hey, what would a UI really look like? And we've got some very creative solutions that I don't want to talk about today, but we are showing some selected brokers and MGAs today. So the feedback we've been getting is, hey, this is incredible. They're looking at, if we buy a brokerage and it takes us 6 months to do an integration, if you can cut that down to 3 months, 4 months, you just made us a whole lot more money. It's a compelling story for them. So we're being approached by the top end of the market, which I'm pretty sure nobody is expecting for us right now. I'm thinking they'll all think that we'll continue selling sort of the smallish brokers that are in our current sort of wheelhouse, but that's not where we're focusing, and that's not where we're actually currently getting a lot of traction. At the very top end, they're all using the same platform. And they're saying to each other, how do I have a competitive advantage if that guy's got the same car with the same engine and the same options? How do I do something different? So our philosophy was we need to first and foremost give a creative advantage back in the marketplace. So how do we do that? We do that by allowing unique deployments of our software. Some of the stuff will be 100% of our own delivery, but we're allowing our clients to pick and choose from third-party offerings and have that integrated into the workflow so that they can actually have their own creative advantage, competitive advantage. So it's a very large focus. I probably think focus is one thing, but in our world, it's focusing on and changing the whole process of how this is done. We're basically saying throw everything else out. The way it's been done to date is great. It worked well. It got us to where we are. But if you're looking forward 5 years, 10 years out, is that the platform that you expect to be competing on 5 years from now? I think the answer for most businesses is going to be no. There's too many limitations. It's just too much baggage. So you have to actually at some point in time say, we need to reinvest in the core technology that all of these solutions are built on. I think for us, out of necessity, that's where we're at in our journey, that we have to do something very different. I think for our competitors, it's going to be economics. They're going to have to go back and ask themselves, do we want to spend the money to rebuild solutions that are generating a lot of money for us right now? Do we want to risk introducing a sales cycle back into our own customer base? I think those are very difficult questions for private equity firms to go back and contemplate doing. So I think we're very well positioned to be, I don't like the word disruptor. I think we're actually just a leader in the next version of what this technology story is going to look like. So
just to kind of break it down into stuff that us mere insurance mortals can understand, is this going to be a cloud-based system then? So you're going to basically put everything in the cloud, and you're going to be able to push the content out through, like, are you looking at a web browser, like a Salesforce interface in the first stage, or are you looking at Windows? Maybe kind of give us a little more spec, what we can understand of kind of what this would look like.
We will ultimately it will be a cloud solution. It will look very much like a Salesforce sort of thing. We want to be able to do some very cool things with data to allow for us to mine it. So you mentioned my background is I spent last 5 years, deploying data analytics solutions in the insurance space. Prior to that, we were doing it in a much broader world. So how you profile and segment consumers is very interesting. There's a lot of opportunities of bringing that back into the world. So we will be consuming a lot of data from outside of the insurance ecosystem, bringing that in so that we can identify opportunities for insurance brokers to go back out and sell as efficiently as possible. So again, starting with RPM, it is an application on the web that integrates back into our Windows platform that's now migrating to the cloud. We were building a new version of our rating software that started about 18 months before I started. We spent the last 7 months looking at the workflows. We brought in some people to help us redesign the workflows, optimized for how brokers are actually using that kind of technology today. So we've architected that. That will start getting deployed in Q2 as well. So we've got the RPM and the rating as being the first thing. It's all backwards compatible in our world, but we're also looking to integrate into other products. I've mentioned that a couple times now.
Well, you mentioned about data. Like one of the challenges we've had is trying to get at a price point we can afford data on the most profitable clients. So when a client comes into our funnel, there's data that tells us how to rank that client. That's been missing. I know I've been looking after the Holy Grail, trying to figure out how I can get a service that I can afford, and the price point was too high. Is that something that you're going to be able to layer into this as maybe phase 3 or 4?
No, that will actually be coming probably in Q3 of next year. So we already have our rating product already collects all of that data. It just has not been put into a format that it could be deployed back into the marketplace. We've been building out a data cube that gives us access to that data so that it can be deployed back out. And certainly we're I guess, announcing to the world today that, yes, we will be offering a data product back into the insurance vertical. We'll be doing it very differently than our competitors. We do see that brokers should have access to that kind of data as well. In today's world, that's kind of restricted to people that are members of a club. And if you're not in that club, sorry, you can't have that data. And if you're in the club, you pay an awful lot of money. And I think that there's an opportunity, and we've certainly been getting feedback from carriers and brokers. Hey, we see use cases for that data. We don't like the price point. We think it's restrictive in the marketplace. And if there's an alternative solution, we'd be very receptive to taking a look at it. So that's definitely a direction that we're going. We see that there are third-party data sets outside of our own, though, that also need to be part of the ecosystem moving forward. You know, if you want to understand, Jeff, that you're an executive on the move during the day and a hockey dad on the weekend, you probably need a little bit more data than what you find in your automobile quote. But the data sets that can tell me that you are that hockey dad on the weekend and Tom's a skiing guy on the weekend, that data is available. And we certainly see that that becomes part of our world moving forward. So you're thinking about, you know, how you're quoting people today. They come in, you ask 48 questions to find out who they are. I probably know that before you even started. You know, if you look at anybody's Instagram accounts or their Facebook accounts today, in 15 minutes, you can probably tell their birth date, who they're married to, the kind of car, the kind of house they live, where they take their vacations. You know, there's an awful lot of information that you can find out on people without having to ask all of those questions. We probably start using that informing people on the marketing side. But I think on the regulatory side, there has to be changes there as well. You know, the regulations today are kind of based on what the applications looked like 30 years ago. And we still kind of linearly go through those applications asking those same questions. Nobody sat back and said, look, how would you do it if you started today? And I think we've got the luxury and the need to take that approach.
So, Greg, you had mentioned integration a number of times in your description of where you guys are focusing, which is obviously near and dear to my heart and the work that I'm doing with IBAC. Where do you see Rival pushing and or getting access to carrier integrations. You're well aware, I believe, that Wawanesa has offered up their APIs to the rest of the industry, and a number of carriers have sort of signed on to that. Where do you see us going with those carrier integrations? Which, let me rephrase that question. Where do you see us going with carrier integrations? And you think that Wawanesa's offer to the rest of the industry is a positive step?
Yeah, I think it's a very positive step. Wawanesa has been a great friend and great partner to us historically. We've had a great relationship since I've joined, and we see that moving forward. I think the whole API world needs to evolve much faster than it currently has been. And we're willing to do whatever we have to do to make that happen. We also see that the world is more complicated, so Jeff's probably not going to like what I'm about to say, but the investment in portals is probably too steep for carriers to walk away from anytime soon. So we see that there has to be an integration with the portals as well. So we will be using an API sort of in the traditional environment, but we also see that we're probably going to have to do something on the portal side as well. I'm just going back to if you're selling insurance and you've got a consumer that's digitally approached you, you've got a prospect, you need to reach back out to them. You've written the business, they make a change. How do you get the price back to them efficiently and in the time frame that the customer is looking for? In today's world, that workflow takes you back to a portal. The idea that the change request using the CSIO transaction, getting that to come back, the work that's involved to make that happen, we can pursue that, and I'm happy to continue pursuing that. But I think realistically, for the distribution channel to continue to be competitive, we have to look at things. How do we deal with the customer? So being able to integrate into the portal world, I think, is actually going to be important going forward as well. So maybe you don't have to learn 47 different workflows for different portals going forward, but integrating into that portal world is something that is probably going to have to be something that speeds up as well.
You touched on this before, and I'm going to come back at it from a slightly different angle, or maybe for a clarity, what do you think Rival's unique competitive advantage is, or alternatively, what do you think the biggest problem that Rival is trying to fix?
Well, other than the whole automation approach today. So if you go back to what at its foundations, so all of the stuff that's available today, all the broker management products, all the MGA solutions are essentially passive systems. They all wait for an end user to type in some kind of request and have that system respond. Today's world doesn't look like that anymore. We're creating an active engine. So our BMS system engine is an active system. It's using AI in the core of the engine. The competitive advantage is I can use AI to build that faster and cheaper than traditional approaches. I can incorporate AI into it so that our end users' experience is entirely different than what they're used to. It's now pushing information out to them. You come in, you get in your car in the morning, your phone tells you everything you needed to know about what happened in your business overnight. We can use AI to do all that stuff. So when we stepped back and looked at, if we're going to do this, what's the proper way to do it? We said to ourselves, we have to start with mobile devices. Mobile devices today are in everybody's pocket and will continue to be there. That's something that should continue to be focused on. We don't want to start and build a desktop application and then try to port it back down to to the mobile. So we said, let's start with what does a UI look like on a phone? It now needs to move up to the laptop experience. And then when I'm in a boardroom, it needs to be on a wall. So that UI is very different. It also will speak to me in different ways. So the way systems are navigated today are very much menu-driven things. You got a menu across the top, or you got a menu down the side. You select stuff, and you're trying to navigate through menus. Technology doesn't need to be like that anymore. I can pick up my phone. My phone can say, "Hey, Greg, overnight you had $1 million claim come in." I might not have set up an activities report to tell me anything about claims, but my active BMS system should be monitoring everything and tell me, here's all the important stuff you need to know. So by the time I got to my office, I'm not looking at my screen, looking at what my activity report told me I need to do. I've already been told. So we're looking at the whole workflow. So what's the competitive advantage? Our competitive advantage is an entirely different way for you to interact with your automation.
Well, my question next on the sheet was about an elevator pitch and compare Rival to other platforms, but a little bit deeper than that. I want to know, like, have you done the research that would say, I am in fact more efficient using your software than I am others? Let's keep price out of it. Maybe I'm better off because it's priced better, but can I provide a better customer experience, and can my people basically handle more PIF and do better with higher productivity? Have you done any measurement compared to that? Like,
we haven't deployed it, so we can't measure it in that traditional sense yet. We will be doing that Q2 of next year. So we've got a lot of stuff that's starting to get ready for initial deployment, and then we'll start counting it. But if you think about, we all used to have a BlackBerry, so we're all old enough to remember BlackBerries. If you wanted to improve on the BlackBerry, would you have added more buttons to it, or would you have come up with the iPhone? That's the kind of approach we're taking at looking at broker automation. We could add more stuff, but is there a better way to actually process things if you approached it differently? So it's all coming back to those key things you just talked about: PIF count per employee, revenue per employee. How do we drive that? We're saying we're driving that by giving them a different paradigm to look at on how they actually process the work. So right now, I've sat through a number of meetings with potential prospects, and they come out and say, "Hey, your competitor does this, and this is how they do it. How would you do it?" And my response would be, we would throw that out and we would give you this. And there's stop for a minute, and they ponder it and they think about it. And then they come around and say, "Hey, yeah, you just said something that was really intriguing and very interesting. I hadn't thought of it that way before," because I've kind of been trained to think that the way everybody's thinking about this today and has looked at this for the last 30 years is the evolutionary path. We're saying, no, there's a different branch. There's a different way to go at this to drive those underlying metrics, because we have to, as a distribution channel, become more efficient. If we don't, the game's over.
let me ask you this. You mentioned all of us being old enough to have had a BlackBerry, and none of us do anymore. But what I can remember, and I want to know if you've thought about this, is when I had to get rid of my BlackBerry, or I chose to, and I went to iPhone, changing over was a very painful experience. I had to, put in all my contacts again. I had to relearn everything. So change management, to me, and every broker I've ever talked to who may or may want to change their BMS, there's a huge level of avoidance, because it's the most visceral thing that you could ever do. Like you stay in an environment that might be better, because you fear that 1 to 2 years of complete and utter hell.
Yeah, couldn't agree more.
Are you as you build something better out? How about that transition zone?
So first of all, completely agree. Today, if you're changing a broker management system, it's open heart surgery on your business. So it's very challenging, very painful, and very scary. So the safe thing for people to do is not change. At some point in time, though, you have to change. So we looked at, how would you go about doing that? And I've mentioned the whole Borg thing. I use it kind of as a joke, but it's actually true. We're replacing components. So we'll start with RPM. It's a common starting point for you. So it will integrate with our current products, and will also integrate with third-party products. And we're also having conversations about what is the potential for that to take data from our competitive systems and put it back into RPM. So it's making that drop into the hot water much slower, so that your users over time can become comfortable with the change process. Components start getting improved, replaced. They have an opportunity to use it and get familiar with it. So that's great for us, for the business owners and the people sort of our generation. The people coming into the market, though, look at their technology very differently. They're much more accustomed to the kinds of things that we're building. The apps that we use within our own business today are very different than the Windows apps that we're building and maintaining. We looked at would you bring in new employees? Can you reduce training and that learning process by reducing the complexity of the BMS system? And we came back with and said, absolutely. We can find a UI that's way more intuitive, way more familiar for a younger demographic. So we're trying to look at how we bring on new employees within a brokerage, but also give the older employees, my generation, that slower transition period, so that they don't get dropped into the hot water all at once and figure out how to live and swim in hot water. It's a slower process. So we start with RPM, the quotation system starts going, the forms start getting changed, then we start changing policy data, then it's just a very well thought out evolutionary path, so that you can make the adjustment and make that heart surgery a whole lot less scary.
I get the whole idea that you see AI as an ability to, less is more, right? You want to basically have active, so brokers do less but get more out of it. If I'm trying to explain what I understand RPM, maybe you can break it down for the listeners at a deeper level. What can you use AI for brokers to do? Paint a picture of the art of the possible.
Sure. So data is certainly on the broker side of the world and the MGA side of the world is a totally underused asset. It's kind of been walled off and allowed for some reporting use cases and billing and that sort of stuff. It has not been used as an active part of the solution for the broker. So because I've spent a lot of time in the last 15 years in the data world, the ability to use data to inform the process. So the process is a selling process, a servicing process, a claims process. They each have workflows associated with them. And we see that AI actually facilitates those processes by eliminating steps. We can reduce the steps and take advantage of what is the value prop of the licensed broker interfacing with the client. Is it having that resource learn a lot and spend a lot of time learning technology, or is it learning how to service the customer better? Obviously, I think the answer is having the licensed people spending more time servicing and selling is what you want them to be doing. We can use AI to eliminate and tell them how to use their day more effectively. So we started out talking about, the activity list. That's a report. It doesn't need to be a report. You guys have all used ChatGPT, and everybody else has used ChatGPT at this point. You just ask a question and it can tell you a whole bunch of stuff. We see that including that in the workflow just makes it incredibly more efficient. So I'm not joking when I say you get in your car in the morning and your car can tell you everything that happened overnight in your business. You don't have to run a report. You don't even have to ask the question anymore. AI can go through all of the data sets that you have, put together some information and present it back to you in a natural language interface. If you want to read it. If you want your car to tell it to you, it can tell it to you. So there's the big picture. 3 years out, we see that our clients will be using AI in a voice world. It will be scanning through the data assets that they have to figure out what's important for them. It will be used to optimize their particular workflows. So one of the things that we haven't talked about is not everybody in a brokerage does the same thing every day. So you have people that focus on sales, you have people that do back office things, you have people that do reporting, you have people that do accounting. And in today's world, they all pay, you pay the same amount for each one of those people. We think that's an inefficient way to pay for that automation. It's very profitable if I'm providing it, charge you for everything I've ever done for everybody who's ever using it in your office. But if you have a variable at the workstation level solution that this person can focus on accounting and you only pay for accounting functionality, this person can be a producer, you only get the producer functionality and they can focus on that. Back office people, same kind of thing. We're introducing that variable nature back into the environment. So that's very problematic for our competitors. Their whole business model is based on the number of seats that they can charge for, and losing any amount of money at the workstation level will be very challenging for them to respond to. Typically you would look at this kind of situation and say, hey, the big player, the smaller player comes in and reduces pricing, big player just reduces it more and pushes the small guy out. I don't think we're in that world at the moment. Our competitors are all owned by, to a large extent, owned by private equity firms. They will be sold in sometime in the next 12 to 18 months. The price point goes up. The cost of capital gets passed back to the operating company, which means they have to look at how they get more out of everybody, not less. And our strategy is we need to be able to match the price point to the functionality at the workstation level. But for us to do that, we need to be offering the automation that's appropriate at the workstation level. And to do that, you need to use an awful lot of AI to make that kind of information relevant in their particular workflow. So again, we started out, hey, what are you guys focusing on? I gave you a very big answer. It keeps coming back to changing the entire way you look at the ecosystem today. That's one of the words my competitor uses, join our ecosystem. I'm like, hey, no, don't join their ecosystem. You're walking into a walled city when at this point in time, you actually need the exact opposite. You need to be able to interact with more external partners.
A couple of things just to add on to that. So you're saying pay for what you use, fair pricing. Am I actually hearing that? I haven't, because I don't hear that at all. I have to buy licenses for people that don't use it and have to pay for it. And if I try and extract those licenses, it's the same price. The a la carte. I think there's a term that gets used by certain vendors, right? So it's very hard to extract it. And the pricing of the average broker's system makes about as much sense as pricing insurance with black box underwriting, right? It's very hard to explain. There's millions of variables, and it's deceptively like that on purpose, right? It serves a benefit for one person and isn't a broker. And on top of that, our data continually, we not only don't get to use our data properly, and I always rant on this, we get data muled where our data gets sold and somebody else makes money off our data, and we have to pay extra money to get insights that we should be getting automatically because they're selling our data. So it frustrates me in the industry. Nobody seems to want to do anything about it or can, but it sounds like you're trying to change that.
Yeah, we absolutely are. So a brokerage can have their own data cube. You can have our data within that data cube. You can have all those ancillary products data in that data cube. And the AI that we're using can look at that data without having to reformat it and say, hey, the description in one system for this variable was one way and it's different in a different one. The AI is smart enough to look at that and say, effective date is exactly the same in all of the different ones. We can just access that kind of data. So if you do all that sort of stuff, you can make that data available back to the primary users, which are not allowed to use it today.
Greg, let me let's kind of ask you to take out your crystal ball here. So we've got a number of BMS vendors in the country. Right? There's Applied, there's Vertafore, there's Acturus / also owns Power Broker. There's now Rival. Nude is still around, although they are focusing more on carrier solutions these days. They've actually put a pause in their broker version. And Broker Core, which was starting to come out with the BMS, has sort of changed the focus as well, because they've had some of those same struggles, especially as newer entrants, haven't had the luxury of having, a client list like you guys have. But if you think of that sort of universe,
and there's one more in Quebec, Deltec.
How many BMS vendors do you think will exist in Canada in 5 years?
Two.
Okay.
In 5 years?
Yep.
Woo-hoo-hoo. That's spicy.
And we will be number 2.
Ooh.
Okay, that's a pretty hot take. That's all right.
We've spent an awful lot of time looking at that exact question, and the marketplace does not support the number of vendors that are in the marketplace today, and we're looking at how do we position ourselves so that we will be the rival option in 5 years, and we fully intend to do that. We're looking at all of the options that are available to us. So we will consider acquisitions, we will consider organic growth, we will consider whatever it takes for us to get to where we need to be. So we're not backing off. So somebody asked earlier on, Rival was a name that has a lot of different connotations and meanings to it, and one being aggressive. That's fully part of our toolkit moving forward here, is that we are looking to be a material player in the marketplace. We think it's in a totally unhealthy situation. One vendor having, 65, 75% market share, and then the rest kind of the scraps of what's left is scary moving forward. And the way things have been moving, it will be a total monopoly in 5 years unless things start changing right now. And if you don't stop back and think about that, and I've had this conversations with the CEOs at the carrier level, hey guys, is this the world you want to live in? And they all say, no, this is absolutely the wrong world. We do not want to live in that world. So what do we need to do differently today? And we start talking about what those actionable steps are for today, that they've allowed decisions to happen within their organizations based on, the VP level, the middle management level, what's in their development agenda for the next 12 months, what's easier. And they've kind of just been moving along based on what's less work for me, or less worry, less interruption for me to do, take the easy thing. And we're saying, if you just continue doing that, in 5 years, you'll have one. So 2's better than 1. And if we're going to do that, we need to make some material changes. And everybody has said, hey, we're ready to listen. We're ready to put money where our mouth is. We're ready to have really serious conversations about how we create an environment where that 65, 75% market share is not the case that we're going to live in. Because if that's the world, 5 years out, whoever the private equity firm is that owns that company has total pricing power. So if you're worried about what you're paying today, start worrying a lot more what you're going to be paying 5 years from now. And if you expect them to be offering data back to brokers at an affordable price point, they're happy to see the broker workforce diminish to some extent. They'll keep the user count where it needs to be, but the most profitable part of their world will be the data assets that they're selling.
And I'm curious on what your take or perspective, being in our industry. And one of the biggest news to come out in Q4 was the Canadian government certifying the action against Applied to investigate via the Competition Bureau. And what's your take on that?
I think it's a serious issue. So at a high level, I think it's something that needs to be addressed. I think that there has been lack of competition within the industry, whether that's been the result of any vendor's individual actions. I'm not here to make the case in a court of law about that, but I do feel that however the industry has moved forward over the last 17 years, it has not moved much, and it hasn't moved as fast as it needed to. So I think that whether somebody was doing something that they shouldn't have, or they just were aggressive, I think it's something that seriously needs to be looked at, and I'm hopeful that somebody will come back and say, some changes need to happen, and whether that all happens with the company that's got the issue, or as an industry we figure out something to change, I think that there will be some changes going forward as a result of this.
So, Greg, let's wrap this up here. I'll give you the last word.
So first and foremost, I thank you for the opportunity to have the conversation today. I think that you've given us a chance to put a narrative out into the marketplace that the conventional wisdom is not conventional nor wise going forward, and that there are alternative ways to look at how broker and MGA automation moves forward. I think we're building some really interesting things, and we will be showing things in the not very distant future to a wider audience. Today, we've done that under very strict legal terms, because we don't want any of the things that we're developing being stolen or copied by anybody. But we think that the industry is where it started, at a total inflection point, that if it does not make a change now, the whole channel is at risk going forward. There will always be brokers, but there won't be the number of brokers. They won't sell the same kinds of products. There'll be much more of niche players. There's an opportunity to make it more competitive and healthier, and we're taking every opportunity we can to make that a reality. So I guess my thing is stay tuned. We'll be out. We're building user groups with our client base starting in February. So we'll be meeting with our own customers in February. We'll be at all of the shows. We'll be showing stuff, and we'll be making things available. We've got very aggressive plans, but we also have some very large partners that are looking at implementation within Q3 of 2024. So this isn't all stuff that's far out and just on a whiteboard. People are actually coding things today. We're testing things. We've rebuilt the internal structure of the company so that we know information coming in, products going out, how you handle that all efficiently. So we've relaunched. It's not just a rebrand. It's a relaunch for more than just our company. It's an opportunity to relaunch the whole broker distribution channel with a rethink at how technology gets deployed.
Is retention important to your brokerage? Of course it is. That's why at IFS, we have a cancellation prevention process. Want more details? Give us a call. I know you don't always use a premium finance company, but when you do, you should use IFS. Cheers.